Welcome back to the Deep Dive. We've got another earnings call to dig into today, and this one's from FuboTV Q3 2024.
Yeah.
To be honest, the numbers are
A little
all over the place.
Yeah, mixed bag for sure.
Yeah, you've got growth in some areas, declines in others, and a stock drop after the call that just has me scratching my head.
Yeah, it's a head scratcher for sure.
So I'm really glad you're here to help us make sense of it all.
Absolutely. Happy to be here. Always love a good deep dive. Let's start with the positives, right?
Okay.
FuboTV did see some pretty solid revenue growth in North America. Hit $377 million, which is a 21% jump year over year. And they also beat their subscriber target, landed at 1.613 million subscribers. That's a 9% increase from the same time last year.
Okay, so at first glance, those are positive signs.
Right.
Growing revenue, more subscribers.
Yeah.
Typically, that's good news.
Usually.
But clearly, something spooked investors. What's the catch here?
Well, you got to remember, investors are always looking beyond those top line numbers. They want to see that path to profitability. And that's where things get a little bit
Murky.
Yeah. FuboTV did improve their adjusted EBITDA. Essentially, it's a way to measure their operating profitability. It's nearly $100 million better than a year ago, but they still reported a net loss for the quarter, $54.7 million.
Okay. So they're making more money, but still losing money. It's a process.
Yeah, I'm definitely getting confused here.
Yeah, it is a bit of a puzzle.
So how do we interpret this, especially with that stock drop?
Yeah, so think of it this way. FuboTV's like a plant that's growing really rapidly.
Okay.
They're putting a lot of resources into, expanding their reach, getting new subscribers on board, making their platform better.
Right.
All that stuff costs money.
Of course.
And that's why they're not profitable yet. Investors are basically betting on whether this plant, so to speak, is going to blossom into a profit machine or just kind of wither away under the weight of all those expenses.
I like that. That actually really helps.
So profitability concerns are a big part of this picture.
Right.
But you mentioned declines in other areas.
Right.
What else should we be paying attention to?
I'd say the biggest red flag that's probably got investors worried is that drop in ad revenue, specifically in North America.
Yeah.
It fell 11% year over year, and that's especially concerning considering they are adding more subscribers.
Now, FuboTV did try to explain this away. They pointed to a couple of things. The tough comparison to the same quarter last year when political ad spending was through the roof, right? And also the adjustments they made to their content lineup, specifically getting rid of some Discovery and Scripps networks earlier this year. Does that explanation hold up?
I mean, it's part of the story for sure.
Right.
The ad market is always kind of bumpy, right?
Yeah.
And political advertising is, as we saw last year, super unpredictable.
Right.
And, when you drop popular networks, it's going to hit your ad revenue, at least in the short term. But investors, they want reassurance. They want to see that FuboTV has a solid plan to, make up for these losses and get that ad revenue growing again.
Right.
So they're talking a big game about these interactive ad formats.
Right.
And a strong upfront season for Q4 coming up.
Yeah.
But we'll have to see if that's enough.
So we've got this tension between growth and profitability and now declining ad revenue. It's no wonder investors are a little on edge.
Yeah.
But then we've got this whole other thing going on, that legal battle with the Disney, Fox, Warner Bros. Discovery joint venture.
Right.
And that can't be helping matters either.
You're right. It definitely adds another layer of complexity and uncertainty to the whole situation.
For sure. Can you just quickly remind us what's going on with that lawsuit?
So to recap quickly, FuboTV managed to get a preliminary injunction to block this big sports streaming joint venture from launching. Their argument is that it basically stifles competition and hurts their business.
It's a bold move going up against some of the biggest names in the industry.
Yeah.
What are the potential outcomes here, and how are investors likely factoring this into their decisions?
I mean, the stakes are really high.
Right.
If FuboTV wins this thing, it could force a major shakeup. They could restructure or even dissolve that joint venture. That would level the playing field.
Yeah.
Give FuboTV more leverage when they're negotiating with content providers.
More power.
But if they lose, it's a huge blow.
Yeah.
It's going to be even harder for them to get their hands on content at prices they can afford. And ultimately, that's going to hurt their ability to attract and keep those subscribers.
Right.
And let's be real, going up against Disney, Fox, and Warner Bros. Discovery, it's David versus Goliath, right?
Huge.
It's a huge undertaking.
Yeah, no wonder the market is reacting with,
caution.
A lot of caution.
Yeah.
Okay, so we've got profitability concerns, the ad revenue is down, and this massive legal battle is hanging over their heads. All of this adds up to that 12.64% stock drop after the earnings call. Is there anything else investors might be picking up on that we haven't talked about yet?
One thing to keep in mind is the bigger economic picture.
Right.
We're in a time of rising interest rates.
Yeah.
And that tends to hit growth stocks like FuboTV particularly hard.
Okay.
Investors get more cautious.
Right.
They start to favor those companies that are already making a profit, proven track record,
Right.
over those that are still in that growth phase, spending money to grow.
It's like, show me the money, not just the potential.
Right, exactly.
It's got to be a tough environment for companies like FuboTV.
Yeah, it is. And it makes all these factors we've been talking about even more important. Investors want to see clear evidence that FuboTV can handle these challenges and ultimately get to that sustainable profitability.
Okay, so FuboTV is at a crossroads.
Yeah.
Big plans for growth,
Mm-hmm.
compelling vision, but some serious obstacles in their way. Before we dive into the specifics of their strategy and what their path forward might look like, I want to circle back to something that caught my eye in the earnings. Call those new product offerings, the standalone subscriptions, and that free tier.
Yeah.
What's the thinking there?
It's interesting, right?
Yeah.
It shows that FuboTV is trying to do a few things, diversify their revenue streams, and appeal to a broader audience. They're essentially offering a more a la carte approach,
Right.
You can subscribe to specific channels
Yeah.
or bundles without having to commit to that whole big FuboTV package.
Right.
So now they can tap into a whole new segment of the market, people who don't necessarily need or want the full virtual MVPD experience, but they're interested in specific stuff.
And then you've got that free tier, which is still in its early stages,
Right.
but it could be a really powerful way to bring in new customers and then maybe convert them to paying subscribers later on.
Exactly. It's all about giving people options.
Right.
Flexibility in a world of streaming that's constantly changing. And these moves show that FuboTV isn't just content with being the sports-focused virtual MVPD. They want to be a more comprehensive streaming solution,
It'll be interesting to see how those new offerings perform
Yeah.
and if they can really make a difference for FuboTV.
Mm-hmm.
But let's shift our focus back to those core challenges, starting with that ad revenue decline.
Yeah.
What else might be going on there beyond the reasons they gave, and what are they doing to try to fix it?
That's a great question, and that's actually where we're going to pick up in the next part of our deep dive. What's really interesting here is that this drop in ad revenue is happening while their subscriber numbers are going up. You'd think more subscribers equals more ad revenue, but clearly something else is going on.
That's where your expertise comes in.
I'll do my best.
Help us understand what's going on. What solutions are they considering? What does it all mean for their path to profitability? Stay with us, folks, as we continue our deep dive into the world of FuboTV.
Absolutely. Welcome back to the deep dive. So, as we just discussed, that declining ad revenue for FuboTV, it's a pretty puzzling development.
Yeah, it really is.
Especially when you consider they are actually adding subscribers.
Right.
So let's try to unpack some of the dynamics at play here.
Yeah, and you said something earlier that really stuck with me.
Okay.
It's unusual to see ad revenue going down while the subscriber base is growing.
Right.
Shouldn't those two things usually move together?
You would think.
I mean, what's the disconnect?
Yeah, you're right to question that.
Okay.
Logically, more viewers should mean more eyeballs for advertisers, and that should lead to higher ad revenue, right?
Oh, right.
But the relationship between subscriber growth and ad revenue, it's rarely that straightforward.
Okay, so help us understand this complexity. What are some of the factors that might be impacting FuboTV's ad revenue beyond the reasons they gave?
I think one really important factor is the overall advertising market.
Okay.
We're seeing signs of weakness across a lot of different industries.
Right.
There's economic uncertainty out there.
Right.
Companies are tightening their budgets, and that often means cutting back on advertising.
Okay.
So there's simply less money flowing into the advertising ecosystem as a whole.
Less demand.
Exactly. And that puts downward pressure on ad rates.
So even though FuboTV is attracting more subscribers, they might not be able to charge as much for ad space.
Right. It's a classic supply and demand situation.
Right.
Demand for advertising space is going down, while the supply, in this case, FuboTV's ad slots, is staying the same or even increasing.
So the price advertisers are willing to pay goes down.
Exactly.
Okay, so FuboTV is facing a double whammy, a shrinking ad market, and those challenges from their content portfolio adjustments.
Yeah, and we can't ignore the ripple effects of those content decisions.
Right, you're talking about dropping those Discovery and Scripps networks.
Exactly. And while that move probably helped them control costs, it might have also alienated some advertisers.
Right.
Advertisers who are specifically targeting audiences that were drawn to those networks. You lose those channels, you not only lose potential ad revenue from those specific networks, but you also potentially drive away other advertisers who liked the overall mix of viewers FuboTV had.
So it's all connected.
It is. And FuboTV knows they've got these challenges, and they're not just sitting back doing nothing. They're focusing on a couple of key strategies to try to boost their ad revenue.
Let's dive a bit deeper into those. The first one we touched on is their investment in these interactive ad formats.
Right.
What's the idea there?
So the idea is to create a more engaging and personalized advertising experience for viewers.
Right.
Instead of just passively watching traditional commercials, users might get prompted to interact with the ads, like through quizzes, polls, clickable elements, that kind of thing.
Right.
The theory is that this increased engagement will make advertisers willing to pay more.
Right, because it's a premium format.
Right, grabs attention,
Right.
potentially drives conversions, all that good stuff.
But is it really a game changer or just a shiny new object?
You know, it's definitely a gamble. The success of these interactive ads really depends on a few things. First, FuboTV has to execute well.
Okay.
The technology's got to be seamless.
Right.
The ad formats have to be engaging, and the targeting has to be really precise.
Yeah.
But maybe even more importantly, they need to convince advertisers to buy into this new approach.
Right.
Show them that it actually delivers a return on their investment.
So it's a bit of a chicken and egg situation.
Exactly.
They need advertisers to try it out, to prove that it works.
To show the results.
But advertisers want proof before they spend money.
They do.
Yeah.
But if FuboTV can get through this transition and really become a leader in interactive advertising, it could significantly increase their potential ad revenue.
It's high risk, high reward.
Definitely.
And this ties into something we were talking about earlier, that importance of personalization and user experience in the streaming world. People want tailored content.
They do.
They want seamless interactions, and that includes the advertising they see. So maybe these interactive ads, if they're done well, could be a way for FuboTV to meet these changing expectations.
I think you're right. It's all about creating a value exchange.
Right.
If viewers feel like the ads are less intrusive and actually relevant to their interests, they might be more open to them.
And that benefits FuboTV and the advertisers.
Absolutely.
Okay, so inactive ads are one part of the plan. What's the other lever they're pulling to try to reverse that ad revenue decline?
They're hoping for a strong upfront season for Q4.
Yeah, can you just explain what upfront season is for those who don't know?
So upfront season is basically this period where advertisers commit to buying ad space in advance for the next year.
Okay.
And FuboTV is saying they had a good upfront season, which suggests that advertisers are still confident in their platform and its ability to reach the right audience.
So that's a positive sign.
It is.
But it's just one data point.
Right.
They have to deliver on those commitments.
Absolutely.
And show advertisers that their platform is still valuable throughout the year.
It's about expectations versus reality.
Yeah.
The upfront season reflects what advertisers are hoping for, but the real test is how those ad campaigns actually perform in Q4.
Right. Will those upfront investments actually pay off?
Right. Exactly.
Okay, so a lot hinges on FuboTV's ability to execute well in Q4, both in terms of ad delivery and the overall performance of the platform.
Yeah, and we can't forget about the other big thing we talked about, that lawsuit with the Disney, Fox, Warner Bros. Discovery joint venture.
Right.
How might that be affecting their ad revenue strategy?
Good question.
It's hard to say for sure, but I think it's probably adding a level of complexity and caution to how they're approaching things.
Yeah.
The outcome of this lawsuit could have a big impact on how much they'll have to pay for content in the future and their ability to secure those popular shows and events.
Right.
So this uncertainty might make some advertisers hesitant to commit too much money to FuboTV until there's more clarity about what's going to happen with this lawsuit.
It's like they're trying to build a house on a foundation that's constantly shifting.
Exactly.
Yeah.
It really highlights the challenges FuboTV is facing in this ever-changing industry.
Okay, so we've talked about this complicated ad revenue decline.
Yeah.
And we've explored what FuboTV is doing to try to turn things around.
Uh-huh.
But ad revenue is just one piece of the profitability puzzle.
Right.
Their content costs are another huge factor.
Absolutely.
So let's shift gears and talk about how they're managing those expenses in this increasingly competitive environment.
Yeah, that's a really important part of the story.
Welcome back to the Deep Dive. So we've been dissecting FuboTV's Q3 earnings, and it's pretty clear that their path to profitability really depends on how well they manage a bunch of interconnected things.
Yeah.
From dealing with that unpredictable ad market to keeping content costs under control.
Right.
So let's talk about the content side of things now.
Okay.
How are they approaching content, getting it and managing it in this crazy competitive streaming world?
Yeah, it's like walking a tightrope. Right. We know content is king when it comes to streaming, but getting those top-tier shows and events, it's pricey. And those costs are only going up as competition heats up.
Right. It's a constant push and pull.
It is.
They need a strong content library to attract and keep subscribers, but those licensing fees can really hurt their bottom line.
Exactly. And that's where their strategic decisions become so important.
Okay.
They've really carved out a niche as the streaming platform for sports fans.
Yeah, that's their thing.
Huge library of live sports content. You got your major leagues, NFL, NBA, MLB.
Yep.
But they also have niche sports, international competitions, all kinds of stuff.
I mean, that focus on sports sets them apart.
It does.
But it comes with risks too, right?
Oh, absolutely.
Sports rights are super expensive.
They are. And as we saw with their decision to drop those Discovery and Scripps networks,
Right.
they're not afraid to make tough choices to save money, even if it means losing some popular content. But this approach requires really understanding their target audience. Right. And being willing to take calculated risks on what content is actually going to bring in and keep subscribers.
So it's a constant weighing of risk and reward.
Yeah.
They have to consider how many subscribers they might lose if they drop certain content versus how much money they'll save.
Right.
And then they have to think about whether that money can be better spent elsewhere on content that will bring in even more subscribers.
Exactly. And it's not just about getting the rights to content. It's
right.
also about curating it, presenting it in a way that really connects with their audience and keeps them engaged.
Right.
FuboTV has been investing in data and analytics, trying to personalize that viewing experience. They're using algorithms to suggest content based on what people have watched before and what they seem to like.
Yeah, that personalization is key in the streaming world.
Absolutely.
There's so many choices out there. People are overwhelmed.
They are.
They want a curated experience.
They want help navigating all that content.
And finding stuff they'll actually enjoy.
Exactly. It's about making the experience smooth and fun for the user. And FuboTV is trying different things too, like those standalone subscriptions and the free tier we talked about earlier.
Right.
Those give viewers more flexibility, more choice.
Right.
And that could bring in a wider audience and diversify their revenue streams.
So they're taking multiple approaches to content.
Yeah, a multi-pronged approach.
Recognizing that there's no one-size-fits-all solution in this constantly changing market.
Right. They're balancing their strength, that live sports, with more and more entertainment content.
Yeah.
And they're experimenting with new formats and using technology to tailor that viewing experience.
But how does all this tie into their goal of becoming profitable?
Yeah, that's the big question. It all comes down to whether they can find that sweet spot.
Okay.
Keep subscribers happy with great content, but without breaking the bank.
It's a tough balancing act.
It is.
They have to invest enough to keep people engaged, but not so much that it hurts their financial stability.
And they've got to convince investors that they have a solid plan to reach profitability that's going to work in the long run.
Right. And then there are all those external pressures, too.
Oh, yeah.
The competition is fierce, and it's only getting tougher.
It's a crowded market out there.
It really is. You've got the big players like Netflix, Amazon, Disney.
Yeah.
And then you've got those traditional cable companies who are fighting to hold on to their customers.
They don't want to go down without a fight.
It's a real battle out there. And FuboTV is relatively small.
They are.
Compared to these giants.
It's David and Goliath again.
So their decisions really matter.
They do.
They need to stand out, find a way to carve out a space for themselves in this crowded market.
Yeah, and their focus on sports gives them an edge.
Right.
But that's not enough on its own. They have to keep innovating, keep personalizing that experience, keep making their content offerings better to stay ahead of the game.
And they have to do all of that while keeping an eye on their finances.
Absolutely.
And showing investors they can make money.
It's a tall order, but they've shown they're willing to adapt.
Right.
They're not afraid to make big changes, like that lawsuit against the Disney, Fox, Warner Bros. Discovery venture.
Yeah, that lawsuit is a wild card.
It is.
It shows they're ambitious and willing to fight for a fair playing field.
Yeah, they're not backing down.
But it also makes their future even more uncertain.
It adds another layer of complexity to the whole situation.
It's a risky move.
Yeah.
A win could be huge for them.
It could really solidify their position.
But a loss could set them back a lot.
It could make things even harder for them.
So as we wrap up our deep dive into FuboTV's Q3 earnings, it's clear that they're at a really important point in their journey.
They are.
They've grown a lot,
Yeah.
but they face some big challenges too.
Definitely. A lot of uncertainty in the air.
These next few quarters are going to be key.
Yeah, they're going to be crucial.
They need to show they're making progress towards making a profit.
Right. They need to show those tangible results.
They have to manage those content costs effectively, navigate that tricky ad market,
Yeah, find a way to make that work for them.
and they have to keep innovating
Keep coming up with new things.
and evolving to stay ahead of the competition.
Yeah, complacency is not an option in this industry.
It's a lot to handle.
It is.
Their success depends on their ability to execute well on all these different fronts.
Yeah, absolutely. It's about performing on multiple levels.
It's going to be fascinating to watch how this all plays out.
Yeah, to see how they navigate these challenges and whether they can reach their goals.
All right, well, that wraps up our deep dive into FuboTV. We covered a lot of ground,
We did. A lot to think about.
from their financial performance, their content strategy,
Uh-huh.
the competitive landscape, the broader trends in the industry.
Yeah, we looked at the big picture and the little detail.
We analyzed the challenges they're up against and the opportunities that are out there.
Hopefully this gives our listeners a good understanding of what's going on with FuboTV.
It's a complex and interesting story,
It is.
and we'll definitely be following it closely.
We'll be keeping our eyes on them.
As always, thanks for joining us on the deep dive.
My pleasure.
We'll be back soon with another deep dive into a topic that's relevant and timely.
Yeah, we'll have another fascinating deep dive for you soon.
Until then, keep learning and stay curious.